Namaskar, Adab, Salam, Vanakkam and Sat Sri Akal. Hi guys, in today's video we'll be diving into the data of IndiaMart Intermesh, which is a listed B2B e-commerce giant, has been around for almost 3 decades and is largely profitable and has given great returns to the shareholders. But what is the core business model all about? Well, just like as in case of Flipkart or Amazon, the core business is about not charging anything to the buyers on the platform, rather attracting more and more buyers and charging and earning money from the suppliers by telling them that okay, we have certain premium features under specific plans. If you get those, you will be basically paying a certain money for that. It's as simple as that. And what are the two key features that these plans offer? Number one is lead generation. So basically, if I as a buyer go and search for certain kind of products, relevant buyers will be sent my details so that they can directly reach out to me, connect and try to sell their products to me. That is one, lead generation. The other main offering is basically higher listings, as in case of Amazon or Flipkart as well. The process is simple, that if I'm going to search for certain product, then the products from paid suppliers or paid users of this service are going to show up at the top. That is the basic core revenue model. And there are certain number of leads that are covered in these plans, and for any number of leads beyond that, I'll be charged a separate fee. So that is the overall business, right? So the key here is how many buyers are on the platform. The more, the merrier, right? So let us try to understand that. So the number of buyers on the platform is close to 180 million right now, as can be seen out here, right? It's almost 180 million. Of that, a big chunk basically comes from the rest of India segment. Earlier, it was not that big, but has grown very significant. As you can see in the overall distribution pattern, so 38% of the buyers 4 years ago used to be from rest of India, that is tier 3 and beyond, and almost 44% today are from rest of India, and the numbers have grown as well. So it's more than doubled out here. That is one key takeaway to look at, right? Meanwhile, the other numbers, that is for tier 2 and metro as well, there has been significant growth, but rest of India, fantabulous growth out there. Nothing to debate that. But who is it the buyer that buyers basically buy from, right? So it is the sellers. How many sellers are there? So if you look at these numbers, there are almost 74 lakh suppliers or sellers on the platform, and out of those, around 2.08 lakh are basically paying suppliers. And if you look at these numbers, so basically every quarter between 5 to 10,000 approximate number of sellers on the platform are turning monetized. That is, they're becoming paid members, right? And one thing another to watch out here is that the pace really increased from here on, where it went from almost 1.45 lakhs to almost 1.88 lakhs very quickly. And this pace has slightly slowed down in the recent quarters. In fact, in the latest quarter, there was just close to 5,000 suppliers who were turned to monetized level. So that is a bit of a concern, that this pace should not ideally slow down, rather it should keep on increasing, because this is the core revenue model. That is one thing. But where exactly are these buyers basically coming from? So if you look at these numbers, if we divide the buyers into metro, rest of India and tier 2 segments, clearly much of the sellers are basically from the metro segment. You can see that they account for almost 54% of the total sellers on the platform right now. And then next is the tier 2 segment, which accounts for almost 28%, same as more or less before. And when we talk of the rest of India segment, it accounted for almost 24% of the total sellers on the platform. Then COVID happened, and a lot of those sellers from tier 3 India basically stopped being a paid member, because of course their businesses were hit. And since then, the number have recovered significantly. Though in the overall scheme of things, it accounts for a lower share of 18%. But if you look at the absolutes, it was at around 33,000 such sellers on the platform who were paying for the services provided by IndiaMart. It fell to almost 17,000 and has since grown to 37,000. At the same time, when we talk of the metro segment, the numbers have almost doubled from around 65,000 to almost 115,000. So that is a big improvement out here. Meanwhile, when we talk of paying subscribers from the tier 2 segment, that has also grown from around 36,000 members to around 58,000 members. So overall, gradually the business is growing pretty consistently, but the pace of growth, as clearly evident from the charts here, has slowed down a bit. So that is one major concern. Having talked about that, let us try to understand that are these buyers really loving, are the sellers really loving the platform or not? Buyers and sellers both. So that we can understand from the product metrics. So there are 4 charts out here. Let us try to go one by one, right? So the first chart is supplier bias. That is, number of suppliers who are also buyers on the platform. So that rate has been pretty constant at around 36-37%. So around 37% of all the all the sellers on the platform are also buyers from IndiaMart. So that is a pretty solid thing, because in those cases, the acquisition cost of buyers is much lower, because they have already been acquired and are used to the platform. They know the benefits very well. So that is one thing. The number has been constant throughout, and there should be no reason to expect that this is going to fall drastically or rise drastically in the coming future. That is one. The other thing is daily business inquiries that the businesses basically get. So you can see that the numbers were somewhere around, you can say, 18 million inquiries a day. It grew significantly during COVID times, and then it gradually came down a little as businesses basically recovered and again went to function very smoothly in the offline world. And ever since, the number has been pretty constant at around 22 million. And that is a bit of a concern, because ideally one would want this number to grow and grow, right? So that is a slight of a red flag about the platform, why the users are not inquiring more or buying more if the new buyers are also coming onto the platform. So that is one key issue here. When we talk about product listings, it has grown consistently and very rapidly from around 62 million, that is 6.2 crore products listed on the platform, to almost 10 crore listings now, that is 98 million, right? So this has grown, and as more and more listings basically keep on happening, there will be more and more options for the buyers on the platform to choose from and buy from, right? And what is the repeat buyer rate? So this is pretty strong out here. Around 55 to 50% of the buyers are repeat buyers. So they come back and purchase again from the platform. So as we can see that there are certain very key attributes out here. The core base of the platform is very strong. Sizable number of suppliers also prefer to buy from IndiaMart. And of the people who have begun to buy from IndiaMart, half of them or even more tend to like that experience and they become repeat buyers. And as more and more products are being listed, the purchase habits are likely to go ahead, keep on going up. The only key issue here is that inquiries are not really going up. So that is one key hurdle out here that we need to deep dive into and understand why is it not growing. Something to ask the management more about. Anyhow, now when we have talked about product metrics, it is important to understand who the power users of the business are. Power user analysis is very critical to understand how much of business is coming from what distribution of users, right? So if you look at the numbers, just look at this red line. This basically tells you the ARPU from the top 1%, the revenue from per user of the 1% segment. Just look at that. This user used to do around a business of close to 30,000 in a quarter 4 years ago, and now does close to 70,000 rupees. So there has been a dramatic improvement in the average amount of revenue being generated from an average user in the top 1% segment. Number one. Secondly, the thing to note out here is that this number has been quite flat over the last 6 quarters. So it is not growing anymore. And that is a concern. Ideally, when your top 1% business is growing so rapidly, why should it turn out flat all of a sudden? One key reason can be that this was the time when basically COVID thing happened. A lot of businesses got used to the online ecosystem, and so they got to a particular scale, and now they are used to that level of scale and are not really growing at the same speed anymore and will grow gradually. It is a thesis. Maybe that's the truth that we have to live with, or maybe something else can be possible. The company seems to believe that something else is possible, and we'll try to explore that sooner enough in the upcoming slides. Meanwhile, when we talk about the if we are basically going to take away the top 1%, you will see that the next 9%, there basically ARPU has grown from almost 15,000 rupees to almost 20,000 rupees. So almost a third or around 33% growth out there. So that is also a pretty strong number out here, something to be happy about. Meanwhile, when we talk about the bottom 90% of the users, for them the average sales or average revenue per user over a quarter has been more or less stagnant at around 2,500 rupees or something like that. So this is basically the base of the funnel. From it, a lot of users keep on maturing to the next level, that is top 9%, as the users keep on growing, and then as both of those basically funnels keep on supplying more and more people to the top 1%, that funnel is growing constantly in terms of overall revenues as well. So if you look at the rev share, the top 1% used to contribute around 8% of the total revenues, and it now contributes around 16% of the overall revenues. That's pretty massive, right? And if you look at all the numbers together, just look at this. So the bottom 90% used to contribute around 59% of the revenues. Its share is now 54%. And rest, when we talk about next 9% segment, it's around 30% or something like that. It's more or less where it was, but it's this particular segment which has gained significantly, top 1%. So it clearly shows that the power user behavior is something very strong. As people use more and more of the platform, they begin to see the merits of it, and they buy more from it, they supply more from it, they sell more from it. So this is a clear definition of product-led growth, and this really matters a lot in this particular business analysis. The key user should keep on growing. So one thing to always observe in every quarter's result is how is the number of users in this particular segment, their rev share growing, the top 1% and next 9% segments. That is one key takeaway out here. Now, having seen all of these numbers, let us dive into the key financials out there. What is really coming out of all of these great metrics or things that are not really working out here and there? What is the financial outcome of the same? So you look at the revenue numbers, they have grown, almost doubled quarterly revenues, right? The quarterly revenue used to be around 144 crores and has grown since to almost 268 crore. And it has been a uniform growth out here. There was some flatlining in FY22, and then it has grown pretty fantabulously over the last 6-7 quarters, right? Pretty consistent growth out here. But that is revenues. What about profits? Well, if you look at the profits out here, those have been pretty haywire. They were up and down, whatever, right? And that is pretty confusing. And these are net profits. Also, it is not really just coming from the core operations of the business. It could also be other income, like for example, the FDs or shares held by the company, or probably, mutual fund investments, etc. by the company when it comes to the surplus cash. So if you look at the other income part, it has grown pretty fantastically if you leave 1, 2 or maybe 4 quarters aside. And in the latest quarter, when we look at the net profit numbers, that was 95 crores. Of that, almost 54 crores was basically other income, not the core business income, right? So if we remove the other income part, we basically learn that the core net profit has actually fallen. It had been growing pretty well, and then it basically came down and is now in the range of 35 to 40 CR, something like that, right? For last 4 quarters, on and on. So this is pretty concerning. Why is that happening? And to understand that, we will have to understand if the revenues are consistently going up and profits are not, they are actually decreasing, where the costs are. So let us try to understand the costs. So first up, marketing cost. Marketing cost has not been much at all. It has been between 0 to 3 CR max. So that is not really much of a negative so far. So marketing is done. What about selling and distribution cost? That is something which has grown sizably, but that is also bound to increase as the revenue number or the people buying on the platform has been growing very consistently. As that has grown, so has the selling and distribution cost. So that is understandable. Meanwhile, when we talk about the tech and content part, this has also seen a massive increase out here, from around 22 crores negative a quarter to almost 50 crores a quarter. Right? So there has been a significant increase in this particular cost segment, tech and content. And a part of this is very much understandable that, okay, tech costs are rising. Number one. Why? Because the usage of the platform is growing. Number of users are growing. They are shopping more and more from the platform. And accordingly, as usage grows, number of suppliers grows, the tech costs are bound to increase. So it is also understandable. One. Second, content cost. Why is that into play here? The answer is that the company is trying to woo more and more buyers from the tier 3 segment and beyond segment, as we have seen just recently at the starting of the video, right? So for that, it is investing big into the content play. It is trying to reach out to more and more audiences in those segments via the content distribution part that is there. So again, this particular thing is also understandable, though the rise has been pretty phenomenal out here, right? Something to look into probably. Now, the next thing is manpower cost. Just look at this one. It has gone from almost 50 to 60 crores a month, or average of say 55 crores a month out here, to double, that is almost 110 CR, 120 CR. What happened out here? How did manpower cost double out here? That is a bit concerning, right? Because ideally, when we talk of tech platforms, manpower cost should not be growing at the same rate as revenues. Revenues almost doubled, so did your manpower cost. That does not make any sense at all. So why did that happen? For that, we need to understand where did the manpower addition really happen out here, right? So before that happens, let us just take all the cost centers out here together to understand how the total costs have been. So the overall total cost out here used to be around, minus 100 CR in these particular times, and that has grown to double at almost 200, 220 CR a quarter. So clearly cost centers under these four headers have doubled over the last 4 years, especially manpower cost. That is a big key concern, because for that we don't have any explanation, and especially because this is a tech business, this should not have happened ideally. So let us try to understand what has happened out here. So guys, let us first start from sales team, right? So the sales team has seen a massive expansion out here. If you would see, number of employees in the sales team had grown from almost 2,000 odd people post COVID to almost 3,800 people. But a point to note here is that a large chunk of these employees are third-party employees, so they do not cost as much to the company as a full-time employee on the payrolls would, number one. Secondly, this has been done while ensuring that the revenue per head does not suffer. So revenue per head used to be around 6 lakh rupees per quarter. That grew to almost 8 lakh rupees and has been at 7 lakh consistently, more or less. So that is pretty impressive, right? So no real problems when it comes to sales team. That is not really affecting the margins probably, right? Now let us look at product team out here. This is something very bad if you look at. So the numbers, when we talk about the team size, it degrew somewhat until last year, and then over the last 5 quarters, the number of heads in the team has grown almost 90%. So what really happened out here? Because it is this particular thing which has drowned its revenue per employee from almost 45 lakh rupees per quarter to almost 31 lakh per quarter, right? This is where a massive setback has actually taken place. So this is something to look at. Meanwhile, what has happened at the corporate end team? So when we look at the corporate team, basically the team size was pretty significant at 170. It was brought down massively during COVID. And over the last 5 quarters, it has again added a lot of heads in the corporate team. Why? Because the company is trying to build a lot of new products in the finance space, in the accounting space, etc., for which it is adding more and more product team people, and for them there need to be more corporate heads as well. As simple as that. However, this has been done while maintaining that even though the revenue per head is not rising as it was before, but it has not really fallen that much either. It remains at sort of all-time highs at around 150 lakhs, that is around 1.5 crores per head. So as we can see, the only major team where basically your revenue per employee has actually gone haywire is product and tech, where basically we saw the team size grow almost 90% in 5 quarters, and that has clearly botched up the numbers out here when it comes to margins, profits, etc. So that is where we want to understand why this is happening. And as I mentioned, the company has stated that it is expanding and investing heavily into tech part and product teams, because they are building certain new products which will help monetize the user base both on the supplier and the buyer side significantly in the coming quarters and years. So that is what the company has said. So that is what the entire analysis is about. What we have learned is that the company is selling more and more to the buyers in the tier 3 India, tier 2 India, while more and more of the sellers belong to metro and tier 2 territories. Number one. Second thing that we have learned is that most of the platform metrics are pretty strong, except for probably 1 or 2 things. So that is something which can be understood from the fact that the revenue has grown significantly while profits has not. And while the profits have not grown that well, it's probably because of the massive investments undergoing into tech and product teams right now. And the benefits of the same can be expected in the coming quarters. Meanwhile, other income now constitutes a significant part, in fact more than the operating income in the latest quarter, and that is something to probably ask the company about what really the plans are. The reason is this clearly indicates that probably the company has ample amount of cash that it is not investing, right? So are there any possibilities to do something better with the cash at hand? So that is all in this analysis. Let me know your thoughts in the comments. If you like the analysis, do like the video, do subscribe to the channel for more such analysis and deep dives led by data. And with that, I close this one. Thank you.